So I thank all the people who sold Corsair stock this morning in a state of panic. Hey, what's up? My name is Rishabh Savant. I'm not a financial advisor. I like talking about stocks for entertainment. Corsair stock is on a crazy roller coaster ride today. It was down nearly 6% at market opening this morning. Right now, as we speak, it is down nearly 4%. Trading in high 27s. There was a little bit of overreaction by the market. So Corsair reported earnings today and they were disappointing. Corsair Gaming missed EPS by a grand total of 3 cents. Corsair Gaming missed EPS by 3 cents and generated a revenue of 472.9 million. They missed the revenue expectations by 2.26 million. But take note that year over year, if you compare Q2 2020 to Q1 2021, revenues were up by 24.7%. And remember how the bears were saying that Corsair is a stay-at-home play. But quarter to quarter, we made over 24% more money compared to the same quarter last year. And that quarter last year was the stay-at-home quarter. Q2 2021, which is this year, was definitely one of those quarters since the pandemic began that probably had the least pandemic-related restrictions in most parts of the world. In Q2 2021, people could definitely do more things than just stay at home and play games, which is very unlike Q2 2020. What were we doing in Q2 2020? I live in Singapore, and Q2 2020 was probably the height of stay-at-home lifestyle. I did a quick Google search and found out that it was pretty much the same case world over. So Corsair Gaming sold more gaming peripherals in an almost normal world, which was what Q2 2020 was. Now cases are back on the rise, and there could be an inevitable lockdown in the coming months. So according to the bear theory, since Corsair stock is a stay-at-home play, will we be the direct beneficiaries of any future lockdowns? I don't know. I don't have a crystal ball. All I trust is numbers. And right now, the numbers look fantastic. Let's take a look at some numbers here. I just want to reiterate because I like this so much. In Q2 2020, Corsair Gaming had a net revenue of 472.9 million, which is 24.3% year-over-year growth, which is phenomenal. Gross profit was 130.4 million, an increase of 24.1% year-over-year, with gross margin of 27.6% flat year-over-year. Essentially, Corsair Gaming is still only a hardware company, and a gross profit of 27.6% is actually quite high for a hardware company, and this could be attributed to Corsair Gaming's branding. Unlike Logitech, which is Corsair Gaming's direct competitor, Corsair is one of the premium brands in this space, kinda like Apple in the smartphone space. And finally, let's take a look at the EPS, earnings per share. Earnings per share is basically the net income, the net profit of the company, divided by shares outstanding. I'm gonna ignore operating income and adjusted operating income and dive straight into the net income, because net income is the standard GAAP compliant way of reporting income, and it is more conservative number than all these other numbers. So the net income was $27.7 million. Unlike many other companies in this space, Corsair actually reports a net income and not a net loss, which is a good thing. Corsair Gaming reported a net income of $22.7 million in Q2 2021 compared to $22.6 million in Q2 2020, which is a 22.5% increase. Corsair stock has an EPS of 28 cents for Q2 2021 compared to 26 cents for the same period last year. Take note, these are earnings per diluted share. Normally, we look at earnings divided by shares outstanding. Earnings per diluted share means the common stock, meaning the shares you and I hold, plus all the other convertible securities. So essentially earnings are divided by more things than usual, making earnings per diluted share even more conservative than the regular EPS. If you found this information useful, and if you are one of those people who is still holding onto this stock, please consider liking this video. So I thank all the people who sold Corsair stock this morning in a state of panic. I can now buy more shares at a lower price. Revenues increased by 24% year over year. The company has a positive cash flow. The company is profitable. The company is paying down its debt. And the guidance for future earnings remains unchanged. A slight miss in earnings changed nothing. I'm gonna double down my position. So that's it. Thanks for watching and have a good day.